Hello friends, in this video we are going to see why does the share price fluctuate on a daily basis. Lot of people have this question in their mind as to why does the share price go up and down daily on a daily basis or every second, and I am going to answer that in this particular video. So imagine that you are going to vegetable market, let's say a sabji mandi, and there are people who are selling onions at 10 rupees per kg, 11 rupees per kg and 9 rupees per kg also. And there are buyers also for onions at different rates. So similarly in a stock market, there are sellers who are selling shares at different prices and there are buyers who want to buy shares at different prices. So when lakhs and crores of people transact on a daily basis at every particular second, the share price fluctuates in the stock market. So the share price which you see in the screen is basically the last traded price of that particular share between the buyer and the seller. Example, say the share price of Reliance is now 1000 rupees and the next moment you see it becomes 1002, which means there somebody has bought shares of Reliance at 1002 rupees and somebody at the other end has sold shares of Reliance at 1002 rupees. Okay, so like this, when lakhs and crores of people keep buying and selling shares every second, the share price of that company keeps fluctuating every particular second. So this is the reason why the share price fluctuates. Now you might think, suppose you bought shares of Reliance at 1000 rupees and if you want to sell, you can sell for 2000 rupees the next day. No, it is not possible because nobody will be willing to buy the shares at 2000 rupees when the price in the market is 1000. Similar to example of an onion being sold in the market at 10 rupees, maximum we can sell for 14-15 rupees but not 50 rupees. Similarly, if you sell the shares of Reliance at 2000, after buying for 1000, nobody will be buying those shares in the stock market. Also, one of the factors of this price increase, why people keep buying and selling shares at different prices, is because of the factors related to demand and supply. Okay, which is a basic concept in economics also. When the demand for something is very high and the supply is less, the price is supposed to increase. The price is bound to increase. So the demand of one particular share is very high, is more people want to buy the shares of that company, but not much shares are available in the public, not many people are willing to sell the shares, then the price of that share will increase. Similarly on the other side, when more people want to sell the company shares, okay, say assume there is a bad news which has come into the public, like there is a fraud which has been found out in the company, so in that case, lot of people will want to sell the shares of the company, but not many people will want to buy, and hence that time the price will fall because many people are selling the shares. Similarly, when the good news comes into the market, say company has got a new deal and because of that its business is going to grow, so in that time lot of people will want to buy the shares of the company and hence at that particular time the share price will go up. So these are the reasons as to why the share price fluctuates in the market on a daily basis and at every particular second. So I hope after this video you understood how does the share price and why does the share price fluctuate in the market. Thank you.